Good evening, everybody. Welcome back to my channel. Yes, I'm about to hit you guys with some delicious content. So, guess what? Just right off the bat, I just gotta say that I'm gonna be traveling again for work this week. I'll be in DC, so I'm about to hit you guys with a couple videos to have you guys, carry you guys over, uh, at least to the end of the month of August, and then we worry about the month of September because that's Labor Day around the corner. Then I can make some more videos, some more delicious content for my fellow subscribers, and yes, you're gonna like it. So, welcome to my channel. It is me, the Wingman. I am here to help assist you in your journey in investing. And so, what I have today is we're going to talk about investing. And as you guys know, I am a dividend investor. I pride myself on not only investing in dividend growing stocks, but creating dividend portfolios for passive income. I have a growth portfolio in my IRA that I invest in stocks like Costco, ASML, which is a semiconductor stock. I have a ETF called VTI, which is the total stock market, and so I invest in those type of stocks. But I also invest into dividend growth stocks. And as of today, I just dropped about $4,000 into the market today. I was super excited. I sold some stocks. I added money to certain stocks, and I updated my budget. And so I have three different stocks that I would love to talk to you guys about that you probably haven't heard of. So make sure you grab your pen, grab your paper. Most importantly, make sure you grab some sauce because I love chicken, I love tacos, but most importantly, I love delivering that sauciness content for my peoples so that you guys can grow, make money into the stock market via business, drop shipping, uh, etc. to passive income. So here we go. So for today's video, we're going to talk about the three passive income secrets for dividend investors. I'm a dividend investor. I'm going to assume that you guys that's watching my videos are excited and want to learn how to make passive income in the stock market through dividend investing. And I'm pretty sure you guys either have a dividend portfolio or want to create a dividend portfolio. So I know you came here to learn some secrets. So here's some of the secrets. So here are the key points we're going to talk about today is don't focus on dividend yield as a metric to screen out attractive passive income stocks. And we'll talk about that. A steady growing company is far more likely to be able to support a rising dividend than a stagnant one. So, choosing a stock that has a track record of not only increasing their dividend, but looking at their revenue, looking at their free cash flow, and seeing that basically if the company is making money and making money every year is going to increase its free cash flow, which in results is going to it's going to increase in not only increasing its dividend, but companies like Texas Roadhouse, Apple, Visa, Mastercard. Not only do they increase the dividend at like a 12%, 14% clip, but they also buy back their own stock, which also takes stocks off the market, which makes the stocks that you already have of that particular company way more valuable because supply and demand. And then the last key point is reinvesting your dividend income means that making even more down the line, it takes time to add up. So we just want to just put this as the disclaimer. In the investing game, this is not a get rich quick type of thing. We are investing for our future. I know some people out there investing for retirement. Investors like me are investing for fire so that I can retire early, retire before the age of retirement. For me, at the age 50, I know people that want to plan to retire at 40, 60, and so however you want to invest is for your particular goals and your what you want to do for you and your family. So right here it says you'll make a lot more money if you know how to find and keep dividend payers in your portfolio. And so for me, the best way I go about finding dividend payers solidified in my portfolio is I use Seeking Alpha. I use right here. If you see, I use Simply Save Dividends, and then I also use the Track Your Dividends website as well. That I use to track my portfolio. I use that to do research on just solid dividend players for a particular portfolio. So you can also use dividends.com. And so right here it says the yield is a poor metric, and so as a starting dividend investor, you're going to, when you have a small portfolio, and I mean a small portfolio, I would say a small portfolio is anything less than about $10,000. And so the dividend income, those dividend checks that you're gonna receive is gonna be much less. It's gonna be like $2.50 on a monthly basis, and maybe $5 or $10 a month tops. And so it may be discouraging. You may think that, hey, I'm why invest into stocks that pay 1%, 1.5%? I'm gonna go with stocks that's gonna pay 10%, 20%. But what you don't understand is that when you go and do that approach, you get your reward up front. But then those particular stocks, they don't appreciate in share price. So basically, you have a portfolio, of course, paying you money, and you can use those stocks to pay your bills. But what you'll find is that your portfolio and your money is not growing, which leads into tip number 2, or the secret number 2, which growth wins the day. So companies that grow their cash flows consistently over time are better passive income stocks. I just talked about that. And so right here it says making a few types of evergreen products. So basically, what in this point is saying that when you as a new investor, you tend to want to start out with stocks like Mo, that's an 8%. What else? Philip Morris, AT&T, which is like a 7% dividend yield. Verizon is at a 7% dividend yield. You have a lot of BDCs like Enterprise Product. You have I think that's a MLC. A BDC is like Owl Rock Capital. So by investing to those high yielders, yes, those are great to have in your portfolio, but it's what you'll find is that those companies are not growing their revenue as quickly as like a tech company like Apple, Microsoft, Tesla. And so what you find is that the more the company has the ability to make money and increase their cash flow, the more you'll be able to see for the share price to be able to increase. When you invest to high yield or stocks, yes, it pays you dividends, a high yield, and a lot of dividends in the current period of time. But your investment it's not going to grow as fast as a blended approach, as an investment also in like Apple and Microsoft as well. And then lastly, for a lot of most important people, especially in the Black community, you'll have to understand is that patience is a virtue, and make sure you reinvest the dividend. And so a lot of reasons why I hear that a lot of people don't want to invest, or say, hey, it takes a long time, it takes a large amount of money to invest. Even when my videos, when I break it down, that you only have to contribute maybe $150 to $200 per month into your portfolio, and you can see your portfolio will bloom like a flower. But what happens is that a lot of people, when you invest, you want to see big major results right away, and then most importantly, you want to see that those 50, 40, 100, $150 dividend checks right away. And then also when the stock market goes down and when it's red, a lot of people are in fear because they're not used to investing, that they're going to lose their money, that they work hard. It's very understandable that you've worked very hard for your money, and so if by investing into the stock market, you pretty much are in fear that you're going to lose your money and you're going to lose your savings. But I would say that, hey, I've been investing for the past seven and a half years. I've amassed several portfolios. My recent dividend portfolio is creeping close to $50,000, and I most definitely going to get it to around 51,000 by the end of this year. That's my goal. And yes, I've seen the '08 crash, and I've seen the most recent COVID crash where the stock market had went down. And usually when the stock market go down, when investors are fearful, when people are in fear of the market, when it's red days, those are the best days to buy. It's always nice to have a nice dry powder money on the side to invest into the stock market, into your portfolios, to reap those high returns when the stock market goes back into a bull run. But this point right here, number 3, is very important. Patience is a virtue, and make sure you reinvest your dividends, because a lot of times when people perceive their dividends, and you see your portfolio begin to grow, and the dividend payments begin to grow, instead of reinvesting back into the stock or into your portfolio to buy more shares to grow your portfolio, a lot of people would take that dividend, spend it, buy hot Cheetos, honey buns, and whatnot. And if you want to use your dividends to pay your bills and to pay some bills, you are in your jurisdiction to do that. But you also can reinvest back into the stock, reinvest back into their portfolio, and watch your portfolio grow at a higher clip, 15, 20 years, 20 years plus. And so next, I'm going to go over. So I talked about basically that as a new investor, new investors tend to go at high yield stocks first. Then, as you begin to make money and you begin to see that the lower yield stocks, if you have a lower, I mean, if you have a higher investing horizon, meaning that if you have 20, if you have 15, 20, 25 plus years of growth or investing horizon, you're going to want to lean on stocks that's between 1.5%, 2%, because they grow their dividend at a 10% clip, and then also the return on capital is much higher. And so these stocks right here, some you probably have heard of, some you probably haven't heard of, but are great assets for you. Just write it down, do your research, and maybe you want to add into your portfolio as a new dividend growth investor. And I love to bring new stocks into the forefront that people probably haven't heard of, or may have heard of, but you probably have it on your watch list. So the first stock we're talking about is EOG Resources. It's in the energy space. I've been adding to this stock over the past several months. I bought $600 worth of this stock, EOG, today. Is at $130.37. It pays a dividend yield of 2.53%, but grows its dividend at a 10% clip. The second stock I'd like to introduce you guys is United Healthcare, UNH. It has a dividend yield of 1.1%. It does is on the high side of roughly $497, just rounded to $500 a share, but it grows your portfolio and dividend yield at a clip of 14 or higher percent. And then lastly, a semiconductor stock. Because if you know me, if you watch my videos, you know I love semiconductor stocks. It's analog. So if you like Texas Instruments, you'll love Analog Devices, ADI. Basically, you can catch it on sale right now at $177.22. So this is the best time to buy it, because it was up high as a max is like $191. So this is on a discount, and it also it tend to increase its dividend over 10%, and then also the return on capital is nice. It's not as high as in terms of return on capital of like Apple or Microsoft, but it's also a tech stock. So you will receive a return on assets or equity, typically like 15%, which is not bad, right? So hopefully you guys understand that the 3 passive income secrets that, as a new investor, make sure you just remain patient. Don't fall for the high yields, and most importantly, if you like these stocks, make sure you do research, because for me, I love EOG and I love Analog Devices, and I used to have United Healthcare, but I sold out of it because I wanted to buy some more Apple. Yes, so hope you guys enjoy your day. Enjoy this video. Make sure you like and subscribe to my video. Make sure you comment at the bottom, but most importantly, make sure you like this video so I can push this to the masses. And then also make sure you subscribe to my channel. Peace.